Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. Welcome to Street Smart Property Investing, where we have a look behind the headlines and see what's really going on in the property market nationally. I'm joined by some of the most trusted and some of my favourite real estate experts, where we're going to uncover a whole range of things that are happening in the national property market today. We're going to explore a lot of the common mistakes that investors make. I'm sure we're going to have a great little chat today, so thanks for joining us. I'm joined by Trent Durrington from Guardian Property
Consulting.
Yeah,
that's me.
Jesus.
Yeah. Well, I do have a few companies.
The Bulldog. And of course, Gordon Ruddy, a good mate, a long-time friend in the property market and one of the most known and trusted property investment strategists in Australia. Thanks for joining me, boys.
Happy
to
to be here.
Chat, hey? Look, we're going to talk a little bit, obviously, about the the big, from bust to boom, the doom to boom story that the property market has been, experiencing this year. I think there's a little bit to talk about there. We'll explore some of the key drivers that are, certainly changing the property market at a rapid rate of knots and setting us up for 2021 to, I think, be in a pretty good position. I can see why a lot of people are so excited about next year. We'll have a look at some common ways that investors continue to bloody make mistakes and why they shouldn't do it, why it's not necessary. We'll give some insight into that today. And of course, not all the markets are the same. We're hearing so many stuff in the media. Not all the markets are the same. In each of these podcasts, we're going to try and visit the streets. We're going to try and do a duck dive down and cross over to somebody in well-known and markets that investors are going to be very interested in, and we're going to do one of those crosses today and see what's happening in the streets of Australia, right up close and personal with where what's going on with the property market in that area today. So we'll do that live cross a little bit later. But Trent, first of all, mate, what do you make of this year, mate? How crazy has it been?
Well, yeah, it's for the whole world, obviously it's a crazy year and it's one to sort of reflect on, but there seems to be a lot of positives coming from it in our industry. We started to, hit the skids late 18. We had a number of things working against us for property, being the Royal Commission, the Sydney-Melbourne market coming off, which was coming off a high base. And then we had the election, which scared the shit out of everyone. So then we get through that, and there's some positive signs, some good growth, and then along comes COVID.
Yeah.
So, but then fast forward from COVID to where we are now, and people are just saying they haven't seen a market heating up like this since pre-GFC. So. It is a crazy time. Crazy time,
mate. You've seen some markets. You've, just so the viewers are aware of your background. You've had a very heavy involvement in, kind of planning and managing hundreds and hundreds of construction sites throughout Southeast Queensland. You've had key roles in, some of the bigger organisations here in Southeast Queensland. You're a licensed builder. You turned your focus very much in recent years towards protecting investors through, helping them keep all the rubbish, the craziness, the dirty tricks and so forth out of the, the developer contracts and so forth. Yep. So, mate, you've got a lot of experience hands-on on the ground. How's that transpiring into Southeast Queensland? Like, what's Southeast Queensland feeling like in your mind?
Well, there's a lot of factors there. I think, Southeast Queensland, as far as affordability, compared to the southern states, is obviously, it's gotten down to that 60% of, say, Sydney, even probably lower than that in some areas. And, there's been, over the last 5, even decade, talk about the southerners moving and making the move to Southeast Queensland. And that has been happening, but there's a real shift now post-COVID, or COVID being the catalyst for those southerners moving into southeast Queensland. One, obviously affordability. Two, the lifestyle. And probably the third is the opportunity for people to be able to potentially work remotely. I think it's probably a little bit early to see how that's going to play out. But even if there is a 10% shift in people being able to work from home and potentially, go to the cities, live regionally, go to the cities and once a fortnight, 10% of that workforce equates to thousands and thousands of people.
Oh, it's crazy.
That will move into the regions and possibly southeast Queensland.
Yeah, it's fair call, mate. I know that you and I were talking about it a couple of years ago, and we were thinking, southeast Queensland was really well positioned 2 years ago. Then it all kind of got sucked into a void where the Banking Royal Commission and all those things held the markets back. And it certainly feels like it's overdue for some substantial growth. And I think there's already evidence that it's happening right now, of course. But it does feel like it's very well positioned when you start bringing all those other elements into it.
Yeah, no, that's right. I mean, it's probably for the last 7 years we've been waiting for a transition into some real growth. But the gap between a median price of Sydney and Melbourne and Brisbane has just been growing larger. Just hasn't been closing.
Yeah.
So, we're talking property every day with I talk with dozens of builders and developers, and we're all saying the same things.
Yeah.
Yeah. So, although there's a lot of hurt out there from COVID, in our industry, that the market's moving very quickly. And traditionally I've seen it moves in, things can really move in a 3-month little block. And if you haven't got your finger on the pulse.
Just have a look at the grants that came out and how much all of a sudden we went from, land supply to no land supply. Everything's just gone crazy in just 3-month period. This has been one of the fastest moving years that I've ever seen.
Yeah. Yeah, no, well, I'm meeting with councils in regional Queensland, Western Brisbane, and they are inundated with developers trying to get land DA approved and then construction ready.
Yeah.
And developers just can't bring it on quick enough. Everybody's been caught with their pants down, so to speak.
Yeah. That seems to be the big winner. That land, the price and obviously everything in that land component seems to be very well positioned to, be a big winner in the COVID-19 kind of period. But mate, just so the viewers are a little bit aware, give them a little insight to your background, because you've got a really interesting background. You played professional baseball. Yeah,
so I signed professional baseball contract from high school here in Queensland. Went to the US, and I spent 14 years in the US playing baseball. At the time, I signed for it was $50,000 US to sign professionally as an 18-year-old.
Yeah, big money.
Big money with the Australian dollar. And I ended up with as an 18-year-old, before I flew over in March of 94. I bought 3 acres of land in Hinterland, Gold Coast. So from very early on, I was a property investor. Early on in my career, when I would come back for 4 months in the off season, I'd get on the tools as a carpenter, build a house a few years after that, and learned a bit of leverage, bought some other stock, but also made, and it was basically self-taught, made some mistakes, which potentially we've all got stories.
Mate, that's the key to learning, isn't it?
Yeah.
Make them and keep moving forward, and don't make them again.
Yeah, that's it.
Try not to.
Yeah. But reflecting on what we know now, and being able to give guidance or advice to younger people in simple terms, it's amazing what time can give the investor.
Yeah. Oh, mate, it's incredible when you start pooling those resources together, and you've got guys like yourself and Gordon that we'll talk to as well in a second. But really, you start pooling all those little experiences together, and you just don't have to make have those harsh realizations yourself. You can kind of learn a little bit here, learn a little bit there, adjust, and eventually end up with a much better recipe because of all those lessons that you learn from each other.
Yeah, well, it's 100%. I mean, I just think about the more people I can give guidance to, even as a baseball coach, the earlier you can get them and try and, teach what you've learnt from your mistakes.
Sure.
It's the same as in property now. It can be a simple process, can be safe.
It is a recipe,
but it's
right?
time in the market and compound growth. It's an amazing thing.
Mate, it's a credit to you, because I know how seriously you take that role of just that protective, like I said, you're a bit of a bulldog. You know what the market can do. You know what the developers can do. You know the tricks. You know the problems. You know where the deals can have hairs on them, and how to make sure that you get that stuff out of the contract. So it is a credit to you, mate. But that's all hard earned. That's hard earned, of course. Yeah. Mr. Gordon Ruddy, let's cross over to you, buddy. Thanks for joining me.
Thank you, Phil.
Mate,
pleasure to be here.
You've been by my side for many years, hey? Not too
30,
far away. Yeah,
30,
that's good. Gordon shared my passion for the property market for many, many years. He's been a close mate, and we've shared, an interest or a passion for the not just the real estate industry, but the fitness industry over the years, and someone that I, got a lot of respect for, and most of all, just your heart, like you are anyone that knows you, they all.
He's a nice bloke.
They all think.
Call me the bulldog, but Gordy's.
I'll call Trent the bulldog, the loving bulldog. But you are definitely one of the guys, and everyone that knows you would be sitting there going, well, that's Gordy, right? You've got a big heart, and you've done some pretty amazing stuff, in all areas of your life for many, many years. So it is lovely to have you here, and I really, I'm glad that we get to share this particular podcast together. So, mate, look, just in the scope of the role that you do, and you work hand in hand with investors every day. I don't get to see what you get to see. You get to deal with the mums and dads, and you take that role really seriously. You've got that genuine passion to just take care of people, right? So you're handling those conversations with investors every day. What are you noticing? Like, how's it changed through the course of this year?
Well, when COVID first hit, it was certainly, from investors' point of view, you could see they were scared. Initially they were.
There was a lot of uncertainty. We're all going, geez, what could this be? What could happen here, right?
What's going to happen? And there was all the media was just going, it was all bad news.
Sure.
That's what it was.
Sure.
It was all bad news. So people were cautious. They were, sitting on their hands a little bit. But over the last 3 or 4 months, they're going, all those news reports are changing. The forecasts are changing. So the excitement's growing. Still cautious, but the excitement's growing. And I think it's an exciting time. There's the people I'm dealing with, when they see what the opportunities are for them, and for the little cost to get involved, it's really growing. People who've sat on the sideline, listening to you over the years, but haven't done anything yet. Particularly those people are going, I think it's time. I think it's time to do something.
You surprised me. Like, we were talking last week over a coffee, and you were saying to me that, talking about one of your clients and talking about numbers, and it was all so normal for you. It was also, you see it so regularly, you see their numbers, you help people, avoid purchasing properties where it puts a pressure on their lifestyle. You try to protect them and make sure they can keep their lifestyle today while you're helping them build wealth, towards the future. But the numbers, mate, when you told me the numbers last week in that example, I was blown away that, with interest rates where they're at, and the markets that we're going into at the moment being such strong yielding markets, the numbers are just, I've never seen numbers like it. It's crazy. Tell the listeners your experience last week, that one you shared with me.
So, like you mentioned before, the most important thing for me, for an investor, is that investor experience, the landlord experience, has got to be a great experience, regardless of, the capital growth they may get or anything like that. The experience for them has got to be great. But if you can have a really great experience where, you and I often talk about it, you want to, if you spend an hour a month on your property, it's a bad property. You know what I mean? For me, for my investment properties, my rental statements come in, I press forward, goes to the accountant. It's simple, you know.
Tell
They
you
do
what
it
I do,
all.
mate. I get them all sent to my accountant.
That's even better. So, you know, but anyway, talking about, so Tim and Sandra, so they've been, you know, they've made good decisions over their lives. So they've purchased a home. They're about 10 years into their mortgage. They've got 20 years. They've got a 30-year mortgage. They've got 20 years left to go. Haven't done anything. But, you know, they don't have big consumer debt. You know, they don't have an excessive car loan. They don't have credit cards that they leave up there. They pay it off every month. So made some really good decisions. They've got there's about $250 equity in their home. So the property that these guys are looking at is, after everything's done, the positive cash flow from it. This is just so people know, on interest-only loan on the investment property, the positive cash flow is going to be $232 a week.
Now, I questioned you on that.
You did?
And you confirmed that was based on 100% of the purchase price.
Yeah, so they use the equity in their principal place of residence for the 20% deposit, and then borrow, or that's what they're just in the process of doing. So, and they're borrowing 80% against the new property.
Yeah.
So 100% borrowing.
100% being no money out of their pocket.
No personal money from them. And that'll give them $232 a week positive cash
and you
flow.
said that includes like rates, insurances, property management
fees, everything.
It's crazy.
So what the bankers forecast for them, if they take that $232 a week, apply that to their mortgage, you know, just straight from there to there.
Which has got 20 years left.
And they've got 20 years left. Instead of 20 years, that's going to be reduced to 9 years. They're going to save 11 years off their mortgage, which means when you add all of that up, it's about $250,000 they'll save just by making a decision to go, well, I'm going to invest, you know, in something that's going to become a income-producing asset for me when I'm retired.
Yeah, the market you were talking about was a great market.
Great market.
You know,
the
I was
vacancy
excited.
rates. The vacancy rate in the market we're talking about is, was it 0.07%? That's the vacancy.
Less than 1% vacancy.
Less than 1% vacancy rate. So it's crazy. And then with that property, not only is that property working for them to pay down their own mortgage, you imagine having an extra 11 years of not paying a mortgage. So at this point in time, Tim's set to have his house paid off by the time he's 65. But instead of 65, he's going to have it paid off by the time he's 54. How does that change his lifestyle at 54?
Man, how many more choices do you have? It's just
and that's
freedom,
from one decision. And then that decision, if we just, you know, I think conservatively over the next 20 years we can see a 5% growth in that property. That one property alone is going to add another $1 million to his asset base in the end, which again at a conservative yield on that is going to give him about $60,000 a year. That's from one property investment. He saved $250,000 on his mortgage. Lifestyle all of a sudden becomes amazing. And no money out of his pocket has now created another income of $60,000 a year. It's crazy.
It is crazy. And, you know, the interesting thing for me is I look at it and I go, it's like, you know, sliding doors, right? You do nothing and potentially takes a full 20 years to pay it out. You know what I mean? He gets to the end and goes, okay, I own my house outright. I've got, you know, some super I've saved, but how quickly will that get used up and how much more pressure will there be on him when he hits retirement, and does he have to sell his family home and downsize like we're seeing millions of Australians have to do now? The whole baby boomer generation are now getting forced into that situation. But now he's got choices sooner. He's got, you know, obviously a lot more leverage that he can take advantage of over the coming, you know, sort of 15 years or so. Mate, it's a game changer. It's an absolute game changer. So yeah, look, I was dumbfounded when you told me. I was like, really? Is that possible? Is that true? You know,
How's that even happen?
How's that even happen? Yeah, that's been said before. But at any rate, interesting, and like I said, it's a real credit to you because it's just something that's in your world every day. But for, you know, Trent wears a particular sort of a, you know, hat sort of, fighting the battle on behalf of, investors to make sure they're protected from, what stock they're doing and what's the quality of construction like, and, all of those layers that I don't even understand and I'm not interested in. Of course, my focus is where's the market going, what's, what trends, what's going to influence markets, because I'm just fascinated by the research. But you're holding people's hands, mate, and, that's really where the tyres meet the road, and it's just such a, I guess it's such a, it's a fascinating thing for me to see you, in that world and see what's in front of people at the moment. I think through the 2020s, like at this next 10-year period, this is, for me, the best window to build wealth that I've seen. I've been an investor for 30 years now. You built one of I think the first property
house,
for me, so this is how far you go back and we go back, and we've been watching this market for a long time, but geez, the interest rate's so low. Most people have got loans now, the loans are paying them money, right? So you really take that into the hotspots and the yields, and you know how to do the numbers, and you've got someone like you holding their hand, mate. It's what the average person can do over this next 10-year period. It is just, compared to go back when I was first interested in property, my dad was paying, I think he was paying 19% interest, right? It's crazy. But just so the viewers are a little aware of my background as well. No, let's talk about, where'd you start, mate? Oh, well, the one thing they wouldn't realise is how fast you are.
How fast?
How fast. It's that genetic bloodline, mate. You grew up in Jamaica.
Grew up in Jamaica. Well, till I was 10, yeah. Came over here, yeah. Well, I got into the construction industry back in 1988. People go, how could you start working in that construction industry when you're 5? No, in 1988. So I started in construction industry in 1988, and I was on the, in the construction side dealing with,
project managing, right?
Project managing, and I did some home sales as well. So not dealing with investors, just dealing with, home owners, owner occupiers. And then it was 2007 was when it kind of struck me that I really believe no one was really looking after the investor. Like there was, because I remember the construction company I was working for, we'd get, these guys come up with nice suits and, they're accountants and solicitors, and they'd come and see us and go, and back then that was in early 90s, I think it was, when that first started happening. And they'd come up and they'd go, you got a house name package, we've got clients that we'd like to get them into property. And back then a house name package was $135,000. And these guys would load up $25,000 on top. And I went, So in 2007, quite a few years later, I was going, that's just not right. There's got to be a way that someone can look after an investor. Investors shouldn't be penalised to buy a property just because he's an investor. He should be paying just what mum and dad are paying who are living in it. And that's when I decided I'm going to do something. And I started very humbly in that space, working with the local banks in the town I was with, people I'd built a relationship over the years who, had been lending to my clients. And they were open. Back then there was not all the privacy and so forth, and the local bank manager had the right to go, okay, well, I'll go into my database and, I'll invite Bill and, and Betty and different times. But I built trust with them.
Yeah, sure.
And, I'd put on a very humble little, presentation, and the bank would talk about their loans. I'd talk about property, and, there was no, the bank wasn't paying us anything. We weren't paying the bank anything. And it was just, let's look after an investor. Let's give an investor a fair deal. And that's how I got into where I am now. Yeah.
That's cool, awesome. Mate. Very cool. Yeah, well, like I said, we go back a long way, and obviously you would know better than most. But for the viewers out there, of course, that passion that we shared for the, for the property, not just the property market, but the fitness industry was where we first, sort of linked arms. You're an aerobics instructor in one of my fitness centres. You're still an incredibly fit man these days. But, before that, my personal story is I obviously come from the farming background. I grew up, they say, dirt poor on a dairy farm. And I learnt really early that, money wasn't going to come easy to me, as, it's been said. But over the years, as I found my way into the fitness industry, and I started very early in business for myself, and I had a little bit extra money, I very quickly turned any extra cash I had into buying real estate. And the big thing that I had, which has served me really well, was back in those days, and the conversations that you and I were having back then was, I didn't have anyone to fall back on. I didn't have money behind me. I wasn't earning a huge income. I had to be very cautious about the properties I was buying. It had to be, the holding costs had to be low. It had to make a lot of sense. It had to have a lot of safety elements built into it. And luckily I had people around me that had knowledge and shared my, interest in, and how do we create safety and certainty, and how do we, become more, cautious as investors rather than just buying and hoping and taking risks that we shouldn't take. So that's even 30 years ago. Of course, I look back now on what we knew then. Gosh, you know what I mean? That's one thing about the property market. The more you learn, the more you realise you've still got left to learn. But we've covered a lot of ground in that time, and there's
Literally.
one. Yeah, there is. Of course, I got to 38, and the story. I attempted retirement. And okay, I've got this property portfolio growing. Sydney had just been through a boom cycle, and some other properties. Everything was sort of just was surprising me, the wealth that was coming. I couldn't believe it. So, I tried retirement, drove everyone crazy very quickly, and had to find something to do. You even helped me. We're doing some consulting for the NRL clubs and stuff, and just doing a range of different things. And before I knew it, investors were asking for me to help them in some shape or form. Now, it's been a journey, and we all have layered over, that little path together, over the years in many ways. But I go back to probably one of the biggest drivers, and the thing that comes to mind for me was something my dad said, and I shared it with you before we came into this podcast this morning. I was reflecting, and one of the most powerful, I guess, bits of advice that I was ever given was given from my dad, and he wasn't known for giving advice. He was a bit of a quiet guy that, ruled the house with a bit of an iron fist. We're all expected to work, we're stuck on the farm 7 days a week, so we're expected to work 7 days a week outside of school hours. But one bit of advice he did give me, to his credit, he was a bit of a jokester. So he was either working hard and you weren't challenging him, and he was just joking all the time. But what he did do is give me as a piece of advice that stuck with me, and I think has served me incredibly well, was very early. I think I was about 14 years old. He was buying a farm and doing the bank loan and all that stuff. And he turned to me and he said, Phil, you won't get ahead in life until you get yourself in debt. You won't get ahead in life till you get yourself in debt. Now, that stuck with me, and all my mates, as I observed it over the coming years, they were sitting around dining tables with their families, and they were getting told, debt's bad, the banks are terrible, don't get yourself in debt, all this fear of debt.
There's two types of debt, though.
There's good and bad debt, which we've learnt, and I don't know that my dad totally understood what he was saying, but it stuck with me enough that it went...
He was
He had the
making
principle.
obviously good debt.
Yeah. So he couldn't afford to buy the farm next door. He couldn't save the money, but he could get a loan, and then he'd work his butt off to pay that farm off as quick as possible, then buy the farm next door to that. So I think, I look at some of my mates that are smarter, went through university, did all these layers, or more academic at any rate, and they had all the ingredients, came from money, had all the reasons why they should be, highly successful, but most of them are...
Probably been successful though. But
successful in some areas of their lives and so forth, but it really is interesting to have them come to me, at 50 or whatever, I'm 53 now, and want to get started building some wealth, and... It's through that fear, I think, and not understanding that you've got to leverage. You're not going to get there without leverage, and at the moment, there's nothing like it. What were you getting told around the dinner table? What was your family's attitude?
My old man was an accountant, and at that time when I bought the 3 acres, it was a solid bit of dirt, and debt was good debt was not my friend. It wasn't until I even bought my second property, which was leveraging that 3 acres. The old man was still a bit like, what are you doing, And he even learned, I guess, as he was a bit of an entrepreneur, got into some investing, but it was late in his life that he started to build wealth through property. But at the time when I first bought those 3 acres, it was very conservative. So, you know, it's for your old man to come out and give you that little bit gold chunk there of knowledge or confidence. It was obviously a big head start.
Yeah, I think I'll be forever grateful. Okay, guys, let's cross over. Let's have a chat to one of the nicest and most trusted real estate agents in the industry. A good mate of mine, Mr. Peter Stanford, out at LJ Hooker at Penrith. How are you, Pete?
Fantastic, Phil. Couldn't be better.
Couldn't be better. I hear you did the lawns last night.
Yeah, maybe I'm not feeling as good as I should. But
you got a heat wave. Is there a heat wave down in there, Western Sydney at the moment? Is that hit yet?
No, we've got the heat wave coming Friday and Saturday, and unfortunately, we've got a big auction on Saturday. So we've just ordered 6 slabs of water bottles so that we can at least keep our people hydrated on the day.
Good on you, mate.
Keep the buyers happy, mate.
Minimum of 100 people at the auction, so it's going to be a huge one.
Well, mate, it doesn't surprise me. I know that, mate, one thing I hear, and I know that you were actually hand-selected as my first investor-approved certified office, mate. You're the first office in Australia to, come under this banner that we've been putting together to protect investors and so forth. But as in that lead-up, mate, it was almost like other officers were maybe slightly annoyed with you. You've won that many damn awards over the years. You've got like bloody 30 or something awards out there, mate.
I guess it's been, been in the industry a long time and been with LJ Hooker we're in our 27th year now. So I guess when you put it into perspective, maybe it doesn't sound
You're
that
a humble
many,
man.
Look, a lot of it was in the early days when we were first setting up, and I've gone more into a role of running the business and developing the business. But a few of my team members in particular are winning awards still. And that's really what it's all about. It's, their success is my success.
Yeah, good on you, mate. And that was one thing that was interesting for me as well, because you took that approach with me right from the start. As we discussed the benefits of protecting your database and helping your investors make better decisions as they're buying in remote areas, immediately you talked about, the other people in your office and the people they were dealing with, and you were always very team focused. So it's a real credit to you, mate. The question I've got for you though, Pete, is it's been a crazy year, right? It's been a very different sort of year. How's the COVID-19 period been out at Penrith in the western suburbs of Sydney?
Okay, really good question. When we initially heard that COVID was going to be an issue back in March, we really looked at how we were doing things, and we changed a lot. We've gone a lot to video and virtual tour and those sorts of things, which has been really beneficial. But we also took a very different approach with the office. We actually closed the office for access with clients very early in the piece, and we introduced a few things. We even did our first online auction. So we kept the momentum going without losing sight of the fact that we needed to service our clients and to make sure that their interests were being looked after. So, yeah, we're just doing things a bit differently. And I guess every time that you experience something new, you can do one or two things. You can accept that there's change needed and you get on and you fix it up, or you try and persist with the old ways and struggle. We're quite happy with innovation and doing things differently if it's going to benefit the client. Yeah. And it's all about client focus.
Do you think some of those changes will stay? Do you think some of those things will be long-term changes, Pete?
Look, I think the video in particular, because we're doing a lot of Facebook video and YouTube video for properties, both for sales and rental. We've been doing virtual tours on properties in person for clients that can't get out. And that's been very well received and it looks quite positive. And each time the boys do, and indeed the girls in property management do a video presentation of a property, they're getting better and better and better at it. So the standard has improved dramatically from the first one we ever did. And I think, well, actually, I don't think I know, they enjoy doing this because it's something a little bit different.
Sure.
So, yeah, it's been good.
Yeah, that's good, mate. And what about now? What are you seeing on the streets? Like, is there a lot of buyer interest in your area? Are you seeing lots of buyers
There's more
come
buyer
from?
interest Yeah. Look, there's more buyer interest than there is properties for sale, and sales volume is down only because listings are down. With us, we're up actually 26% this year on the previous year, which is great, despite the fact there's less pickings out there. And the property I mentioned just before, the auction, we've had 103 unique groups through the property in 3.5 weeks. Auction is on Saturday at 11 o'clock. We're expecting somewhere between 12 and 20 registered bidders for the day. And that just tells you the amount of interest and the number of buyers that are out there looking for a limited supply.
Yeah.
So, yeah, I mean, it's great for vendors. They're getting good dollars. And we set a record price last month with a property sale just over $2 million that went to auction, which was also really pleasing considering there'd been properties in the same area on the market for 6 and 8 months for lesser money that hadn't sold.
Yeah, that's why I think you're being very humble, Pete, because I do hear that not all offices are the same. We do hear that there are definitely, in your market, there are people whinging and complaining and thinking that things could be better, whereas you've never been busier. Your business is stronger than what it was the year before.
Mate, the easiest way to say that, and I'm just going to use a little prompt here, which I wasn't going to use, this is half full, not half empty.
Yeah.
Okay, so, and you always have to look at the positives rather than the negatives. And we just keep looking at each opportunity and moving forward to improve what we do. So, I mean, we've had a good year, and I know the team has had to work extra hard and they've had to do extra things, but that'll just become part of the norm now. So much so that we're looking to increase the size of our team by another 3 for next year. So we'll be running around 15, 16 in the office. And a lot of offices are cutting back at the same time. So something's going right.
Yeah, mate, look,
Pete,
sorry.
I'm curious, Pete, just obviously being Australia's biggest city, call it an hour out of the CBD. Have you seen or are you noticing any shifts from people trying to move out your way for one being chasing a bit more affordability or, the travel, being able to work remotely and not go into the CBD every day? Any things that are hot you're seeing come out of post-COVID?
I think affordability is something that sticks in a lot of people's minds. And Penrith's not the cheapest part of Sydney. I mean, we've got southwestern suburbs and indeed some of the outer western suburbs are east of where we are cheaper, but it doesn't provide the same lifestyle. And we're finding quite a few people are talking about working from home now. So I think COVID's had a fairly dramatic impact on where we work from, although we've tended to work from the office more. But the property up at Blaxland, for example, we've had a lot of people from the northern suburbs, Normanhurst, places like that are really keen on the property because they see it representing excellent value for money, but also lifestyle. And lifestyle is, I think, very important to the owner-occupier. The few investors that are been out looking at this particular property see it as a great entry point to the market for them. It will return a good rent return, but they're looking at capital growth on it as well. So there's a whole range of reasons why people are looking out here. Lots of first home buyers, but we've actually put a property on the market last week. It sold on Monday or Tuesday, and it sold well above what we would ever expected it to sell for, like $100,000 more. It's just what it's going. And once again, supply and demand, and there's lots of demand, but not a lot of supply out there at the moment.
Mate, obviously a lot of our listeners are property investors and landlords, right? Now, I know that that's a very strong part of your business. You've got a very professional team. I believe even through COVID-19, from our conversations, you've actually grown your rent roll through this period. It's one of the strongest rent rolls in the western suburbs, something that you should be very, very proud of that team and how professionally you take that role, which I appreciate as a landlord myself. Has there been any change to things out there? Have you seen, we've heard doom and gloom stories and landlords needing to reduce rent and so forth. How's COVID been through that period for you?
Okay, great question. I believe the Sydney vacancy factor is about 6%. We've been running at just under 1%, which is fantastic. And also in terms of rent reductions, I think we've only reduced 2 rents overall out of nearly 700 properties, which is phenomenal. But our arrears are the lowest they've ever been as well. So the tenants are being managed correctly. So our landlords are doing quite well. We've actually increased rents recently on probably 25% of our rent roll at a time where other areas are struggling quite badly. And I think one of the things is that we don't have a huge number of people in the hospitality industry out here. So they're not as adversely affected as what it would be in the eastern suburbs and the inner city and maybe the northern beaches. So we've been fortunate in that regard. Yeah, but there's been some high demand as well. And tenants out here know the high demand for very few available properties is going to keep the rents pretty stable. And if they don't do the right thing, they know that they're going to have a few issues later on. And it's about education. I mean, we treat our tenants really respectfully and we consistently talk to them. We've gone on to SMSing a lot of the stuff we send to them now, which has had a big impact, positive impact. People won't open an email, but they'll most certainly get their phone and go, oh, I got a text message. And we've had such a positive response from that as well. And that's just one of the other changes that we implemented earlier this year.
Mate, it's credit to you. And the noticeable things that stand out from that conversation are obviously, the strength of the local market. It is a real community out there. You mentioned some other areas around you that have more, social issues and different things that are happening. You've got a really strong community in Penrith. It is a very different dynamic, a very strong, vibrant community with really great facilities. It kind of insulates you as being a city in the West, right? But also what we picked up from that was, so many listeners would hear about the vacancy rates in Sydney and be alarmed. But of course, that could be limited to certain suburbs and certain property types and so forth. And you're a great example that, your vacancy rates are below 1% and you've had next to no need to reduce rents during that whole COVID period. So it's completely opposite to what the media headlines often can suggest about the Sydney market, depending on which postcode you're talking to.
We had 2 months back to back where we had absolutely no vacancies, which is really unusual. We've had it a couple of times in the past, but very rare. But we had 2 consecutive months where we had properties coming on for rent, but they weren't vacant. So we had no vacancies for 2 months straight, which just unbelievable. When I talk to some of the other business owners around Sydney and even in the country. So, it's quite an interesting process.
Another interesting thing I picked up in our conversation, Pete, was you pointed out, and this is something for investors to be aware of, is that vacants that are the properties that are sitting vacant are the older walk-up unity type stuff that we know intrinsically there's maintenance issues and it's hard to make the experience from an investor's experience work good from a numbers perspective. But you're also seeing that if anything's vacant, it's that end of the market that's got vacancies.
It tends to be. I mean, our older units are late 60s into 70s, and they're starting to show their age in terms of floor plan and just what's available. And because there's been so many new developments done, the tenants are flocking to that because for an extra $30 a week, they can get brand new open plan living with nice big balconies and those sorts of things. They will struggle, but we've got one of our landlords who's been with me for 24 years now, owns multiple blocks of units, and our vacancy factor with him is still at 0. So it's getting the right tenant in, the ones that aren't going to move. He's in a good location. Yeah. But it's about correct tenant selection as well.
Yeah, it's a process.
Where we renew leases when they're coming up rather than letting them expire and then find out the tenant wants to move on. If we get in early enough, we can often talk them into renewing because it's the best way to go at the moment. So we just keep them a bit longer. Our average, a lot of agents are experienced in less than 12 months, a lot 6 months average with these walk-up units. We've got tenants that have been in them for 20 years now. So it's been positive in that regard as well.
Yeah, look, I know personally, I've got a couple of blocks of units myself, and I know that in management of those, it's almost like I'm a business owner. You've kind of got to manage them in a certain way and be a bit hands-on and have a very close relationship with the property manager. And there's conversations and there's negotiations around keeping them as a tenant, just to manage what their expectations are, to keep those rents rolling and not have those vacancies and so forth. Whereas other parts of my portfolio, which have got newer stock and so forth, I wouldn't even have a clue because there's always 20 people lined up to try and rent them the second that someone moves out, So it's a very different strategy. And I know both of them, can work, but I know the older, those blocks of units, they can be a bit of a job, like a bit of an expertise that you need to develop in a little business model.
So there's even little things that can be done. I mean, with the tenants that rent those older, cheaper units, they often feel as if they're second-class citizens with a lot of agents. And about just on 12 months ago, it was before COVID, we introduced a gift basket for new tenants moving into all our properties. And it's a $20 spend, $25 spend, no big deal. But we've had tenants in tears saying we've never been treated so respectfully when we've rented a property. So we're trying to build that relationship. So if they don't stay in the property, they'll stay with us. And it's been one of the best things we've done in a long time because it's something that's so different and sort of left of centre that's happened out here.
Yeah, well, mate.
I don't know if anyone else does it. But it's worked so incredibly well.
Yeah, congratulations once again, mate. You're all, like I said, there's so many little facets to what you're doing out there that I know it's a unique kind of experience you're creating as a team, that you're constantly always, striving to think outside the box, try to deliver more, give better service. And like I said, I know you're humble, but that big string of awards you've won over the years, I'm sure they're been very, very much deserved, mate. Hey, buddy, one thing... Say again?
Sorry, I was going to say, I still can't top my senior property manager. I mean, she's won international and state ACT awards, which I haven't done. So, I mean, I'm blessed with some really good people in the office with lots of experience and the commitment that you need. And that's really how business should run. It can only go forward when you've got that sort of approach from people.
And you only attract those sort of people if you're a great leader. So, like I said, I think it's a pretty impressive thing you've developed out there, mate. Buddy, I'm excited that we're working together. I'm excited that we're going to be giving your database, all your clients, a regular quarterly update on what's going on across the national property markets. That'll be, something we're going to be doing. I think our first one's not too far away, actually, like a national property market update. So you share my passion for protecting your database, even when they're buying outside of your area, just making sure that you're not letting them walk head on into all the common mistakes that we see and so forth. So thank you for sharing that, that passion with us.
Oh, you'll have to excuse me, my throat just went. Look, I think it's important. It's not about just selling somebody something for the sake of selling it. An investor in particular, they need to ensure that they're going to get not only good rent return, they also need to be confident the capital growth is going to be there with a no fast, low maintenance type purchase, especially in the first few years. And investor approved is one of those things that I believe will do that really well. So much so, and I don't know if I should mention it, but I've jumped on board. I've been working with Gordy, and we've bought our first investor-approved dual income property, and looking really forward to it actually being constructed. It's not far off starting, I believe, and it won't be the last one because we know that it's going to produce what we need, and that's positive cash flow and an opportunity to buy again sooner rather than later.
Yeah, mate. Well, thanks for sharing that.
Big statement.
Yeah, no, I appreciate you sharing it. Like, I know how well you bought too, because you bought in a postcode that was the number one most searched postcode in all of Australia in October. I know you're already making money and you haven't even got the keys yet, right? So it's a great move. I know you've worked closely with Gordy. He's really enjoying helping you and your wife out and so forth. So it's great, mate. It's great that you get it. It's great that you're not just a fan of it, you're also a fan of the investing experience and the safety mechanisms and the way that we've built the model.
But the funny thing is, we weren't going to buy another investment property. I'm 66 and I should have retired 2 years ago, but enjoying things so much, we've committed to the franchise for another 5 years, and I've committed to my team for another 9 years. So it's going to be around for a bit longer yet. And whilst we would have done a lot more travelling except for COVID coming in, this just looks like too good an opportunity to walk away from. So, and whilst we're not quite there yet in terms of it being completed and getting rent returns, we're so excited about the fact that it's going to just add another dimension to our portfolio.
Yeah, good on you, Pete. Hey, mate, really great to connect. Thanks for giving us a little bit of your time. I know you're a very busy man, but we do appreciate it. We'll cross over again sometime in the near future and say good day and see what's going on in that beautiful little region that you're living in there, buddy.
I've lived in worse. It's a good place to be.
Yeah, good on you.
It's a good place to be.
Good on you. And I do look forward to, like I said, having a chat to your database and sharing with them some of Gordy's strategies and things that we're seeing, the screening mechanisms, what's going on around Australia, and giving you a really great update. So thanks for joining us, mate.
Thanks, Phil.
Good on you, Pete. Take
Thanks,
care.
mate. Talk soon.
Cheers, mate.
Bye.
Bye.
Very interesting to hear that Pete talks about the obviously the stability in those outlying areas through COVID-19, and of course the growth that they've even had during that time, which is unexpected. It's been a year full of unexpected things. There's so many elements to what happened this year that none of us could have understood. We saw the banks talking about 30% falls in prices. Now we're seeing them all come out this week and make forecasts around, up to 20% growth from some of them over the next 2 or 3 years, So it's been a major turnaround. We're now seeing the confidence levels from investors, 1 in 4 investors at the moment, 1 in 4 Australians, not even 1 in 4 investors, 1 in 4 Australians are now eager to buy, right? They're eager to buy and auction numbers and people registered for so forth. It doesn't surprise me. I was in one of the markets last weekend having a look on the ground and talking to agents and viewing stock and so forth, and it was overwhelming, the conversations with regards to a listing not even getting to market, not even getting to the open home. As soon as a listing is kind of available to an agent, people are trying to buy those properties often sight unseen just to get them off the market, to know that they've got some surety around it. I know we're seeing a lot of that in southeast Queensland.
Oh, we are, mate. We are. And obviously some of the areas that we target through investor-approved high owner-occupier estates. In the ability to secure a one-off investment property in some of those are difficult, and obviously we can do that through some relationships, but when you've got 100 odd owner-occupiers that have put in a ballot to, hopefully get drawn out of the hat to buy a block of land, and if you're potentially investing in that same estate, it all equates to a pretty sound investment, especially moving forward to understand where the vacancy rates are, and the yields are fantastic in obviously our targeted areas, and that typically means historically good. It's followed by good capital growth. So it's definitely, it's all building momentum.
Mate, it's a really good point, that whole owner-occupier point, right? Like, we've always made it a big part of our strategy. A lot of investors, that buy, particularly when they're buying interstate and buying through, sales groups or whatever, they're not aware of those vacancy rates in the suburbs, and we'll often look at them and think, we'd hate to see, particularly the people you're helping and so forth, you're always trying to protect them and keep that strong percentage of homeowners in those areas to create that that feel and create that capital growth and protect the investors. But you're right, Trent. We're now seeing because there's such a huge percentage of homeowners, first homeowners, downsizers, people moving interstate, people in this urban exodus phase, moving into new areas. We're now seeing ballots, for lands coming on and ballots. We're seeing websites crash, because they just can't handle the volume of people trying to participate in ballots. We're hearing about estates where they've got 200 lots of land, which is a huge amount of land coming on in a stage, and yet they're getting 3,000 expressions of interest. It's just unbelievable. And if you're an investor and you can get caught in that wave, if you can move in that growth corridor and be part of that journey, and particularly at how affordable it is at the moment. The stock's still affordable. The rents are going up as well. Land's going up. Everything about it is just, who would have thought we'd be here at this time of the year?
Well, mate, it's probably a good point. We give some credit to some key people or organisations, one being the banks and two being the government.
Fair call.
Navigating COVID. It's created, you mentioned the first home buyer, has created an opportunity for first home buyers to get into the market earlier with the $25,000 grant. Then there's the state grants. First home buyers are getting 40, 50 grand contributions to get into the market, which is fantastic. But coming back to the banks and the bank holidays and the other stimulus that was given by the government during COVID, they've got to get some credit. We gave the banks a hard time, post the Royal Commission and probably given them a hard time about their profitability, but it's really put us in a position where we are today as a nation to navigate COVID and come out probably the strongest.
Mm. Oh, mate, we're looking good. I think we're just, everything about Safe Australia and everything how we're presenting, I think we're just going to be so attractive. Imagine how many people, the way that we're viewing the US and different dynamics in different parts of Europe and even Great Britain and the people would have normally retired and moved into Spain and other areas of Europe. Yeah. All eyes are on Australia. All eyes are on Australia.
Yeah. No, that's another good point. That's only going to put pressure on Australian property is the 200,000 plus expats moving home.
Yep.
When the migration tap is turned back on, not only are you going to have the Asian migrants coming in, but you're going to have, Europe, the US.
A new breed, more nations that are looking at Australia.
Yeah. And Phil, you've mentioned this, the government can turn that tap on and off.
It's like they've got their hand on it. That's the thing that I always give people a bit of comfort with is if there was a housing bubble, the one thing about Australia that's different to everywhere in the world, and I've tried to I've investigated investing in many other areas around the world, the US and different parts and into Dubai and different parts of Europe and different areas that I've had a crack at. Why wouldn't I have a look at investing into those countries? But the deeper I've looked into them, the more it's just, it's been a mirror to look in to realise how great we've got it in Australia. The way the Australian government's got, property ownership or particularly the investment property side of things set up in Australia is the government doesn't want to supply housing. They want private investors to supply housing in Australia. And every part of the way that they've built that is unique, and every part of that creates an unbelievable environment, particularly if you're paying too much tax and, you're a typical hard-working Australian. They want you to help supply that housing, but they're prepared to give you amazing benefits. Most people stuff it up. Most people don't know how to do negative gearing. They actually mess it right up. But the reality is our laws are unbelievable if you know how to do it. And the other side is the government knows that a huge portion of our wealth is tied up in real estate, and they don't want that to have a crash, So they're always looking to go, how do we navigate our decisions moving forward to give confidence to the Australian property market? It's a fine line for them because they turn that tap on a little bit too much and property prices go up too quick, of course. Turn it off and then they put pressure from another angle. We go through COVID, they go, how do we adjust it? But I got some comfort even with the Reserve Bank's comments on Melbourne Cup Day that they're a further rate reduction and a new historic low, but also some comfort around the fact that the current low levels of interest rates are here to stay, a few years at least. And the governor, basically Reserve Bank governor, announced that they're still sitting on, unannounced, still sitting on other policies that they can pull out of the, if needed, if our housing market overheated and there was any risk to a bubble in the Australian property market. So there's layers on layers of things that for me feels like it's a pretty exciting period ahead for the Australian property market.
Well, you got to reflect too on Sydney and Melbourne prices that have, obviously the rest of Australia has gotten caught up in the bubble that's going to burst. Granted, Sydney and Melbourne have pushed pretty hard and continue to, but there's still this shift into regional. So the government would be going, well, ideally we want people to move to regional areas, and that's happening. So there's some gives the government some confidence there. Potentially takes a bit of heat out of that Sydney market if people are willing to move to places like southeast Queensland or far north coast, whatever that might mean. So again, it's all momentum building. It's exciting.
Yeah, it certainly is. Certainly is. I know for me, the one of the elements that I was reading about when I was digesting the bank announcements this week and their new forecasts about growth ahead, the undertone, particularly from National Australia Bank, was that they had a lot of comfort in the fact that there was growth ahead for the property market, not a fall, but there was also a lot of segregation in the market. They were one of the first ones to talk about, all the differences of the different sectors in the market. But a big part of what those banks were kind of putting forward was not only they talk about the Australian property market going up by a certain percent, 9% or whatever they forecast it's going to be in 2021, but obviously inside of that overall forecast there's areas that are going up double that, and there's areas that maybe don't go up at all. But the comfort, I guess, that the banks seem to have, and they were mentioning it directly or indirectly, was the fact that a lot of that swell is going out of Sydney. So what is now very affordable stock in some of those big key regional cities, it might go from a median house price of $550,000 to a median house price of $700,000 or whatever it might go to over the next few years. But overall, it feels still like, in compared to Sydney and Melbourne, those prices don't feel crazy, right? It just feels like there's a spread to where
that's right. Yeah,
which is very interesting.
Yeah. And modest growth like that, it's life changing for people though. I've got I mentioned these clients the other day too that they bought a couple of properties. What was it, 4 years ago in a regional town in New South Wales, which the average person from Melbourne or Sydney would go, why would you do that? But it's affordable. That's what people can afford to do. They can't buy $1 million property or $2 million property in Sydney, so they buy a $400,000 property in a regional city, and they bought two, and then because I spent $800,000. Sorry, they spent $350 each, so $700,000 I spent to do that in Sydney. What would they get? A 2-bedroom unit, which might get them a 3% yield. They buy something that's given them, a 5% yield, and in 4 years...
Come back one step, that 3% yield means you've got negative cash flow or have had in the past, body corporate fees, et cetera, potentially vacancies in today's market, and you've got a bit of a handbrake on what you can do moving ahead, right? You don't have a lot of choice. All of a sudden you go, no more for you. You can't do anything else, until the market catches back up, and you could even sell it for what you paid for it. So that's a real impact.
Yeah, in 4 years' time, they're so excited. That was their first. They had their home. That's the first investment they'd done. They were so nervous. I don't know if I should be doing this. But they went ahead and did it. And 4 years later, all of a sudden, the bank rings them and says, "We revalued your properties, and you've got another $200,000 worth of equity." For an average person, that's just mind-blowing. It's life-changing for them. And
best of all, mate, they're probably at, the start of a few more years of growth, and already they've got the equity or the ability to move forward and get a bit more leverage.
They've got choices,
Yeah, they've got choices.
And that's what I want to do now. They go, well, we're ready to go again.
Yeah.
You know, but they haven't had to work overtime to create that $200,000. You say it a lot. You know, when you buy a property, that property's got to go to work for me from day one. And that's,
the lazy
that's
investor
what,
you hear Phil talk about. We don't want to hear about it. You mentioned it earlier. You know, obviously the statement goes to the accountant and we'll reevaluate in potentially 12 months for evaluation or a couple of years and see if you've got an opportunity to draw some equity. But that's the way. Certainly the way to invest.
I think the changes are happening, and correct me if I'm wrong, but I think what we've seen and what our frustration has been over the years is watching people work hard, get themselves in a position to buy a property an investment property. They might already own a family home, or they may not. We're seeing a growing number of people that are choosing to, rent where they want to live because they can't afford to buy, and then they're building a nice little investment portfolio outside of that local area. But the traditional model, they own a family home, they get to their mid-40s, children are starting to, leave home or whatever it may be, maybe a bit more than mid-40s, maybe it's 50. But the reality is all of a sudden they start going, the next phase is we need to look at our retirement. We need to start setting ourselves up for retirement. But unfortunately, so many people, maybe through being time poor or just not respecting that, there is a recipe or a formula here to making the most of that opportunity. So they get the ability to grab some money, some finance, they get some sort of, budget in mind, and then they get the property guide out on a Saturday, and before you know it, they're walking through houses and they're using emotional buying decisions, and they buy a house that potentially, or a property that potentially makes life harder rather than easier. And they'll still look like a rock star. The good news about property is you'll still look like a rock star 15 years, 20 years down the track, but at what cost?
If you can hang on.
And
for a lot of people, it's just too hard, so they give up. When it's just those little percents that you have a look at, and you can be a totally different experience.
So what do you think are the biggest? For the listeners, the viewers that are tuned in today, what do you think? The three we kind of talked about three things that investors really should respect. We're coming into a moment in time where confidence is high, interest rates are low, the numbers are fantastic, finance is even easing early next year. We hope that by March next year, investment loans will be easier to access, but that spells danger to me because if people don't realise there's a new rule book, it's not the same as it was even a couple of years ago. Negative gearing laws have changed. There's a whole range of things that are always changing. But where do you think the basics of that are that people could go wrong? We just sort of touched on one of them, which is that whole buy and hope thing, not having a strategy. You've got a thought on that at all, boys?
Well, you've got to have a strategy, and I just touched on it. I've seen people that they buy an investment property, might even have great yields. Might have experienced some capital growth, but the area wasn't the best, and they have maintenance issues, they have tenant issues, and people hate that. They'll pull out of it because of that issue. I said at the start when we were first talking that the landlord experience is so important. People don't have the patience for things going wrong. They just don't like it. It's just a hassle for them.
Particularly when you can avoid most.
Exactly. You don't need that. You don't need to have that experience. So it's so important.
Yeah. Well, part of that strategy, Phil, I think. It's fine as property investors to say, okay, I've got my PPR, my primary residence. I'm going to buy one investment property and hopefully have a good story, and I make $200K in the next 5 years. And it's as a property investor, I think your strategy should be long term, whether that be your short term strategy. Depending on your age and where you're at, but it's about duplication. So you've got to have the mindset that you're buying in the right area. hopefully the market and forecasts do occur, but your mindset is, I'm going to duplicate. Because the power of duplication is, which, Gordy, you show your clients how that works, and by the time retirement comes, it's it's a different ball game as far as their quality of retirement with multiple properties in their portfolio.
I think I was really lucky at a young age because in my probably mid-20s, some of my mates used to question why I would sit down and have coffee with, a lot of my older mates.
Old Johnny.
Right? Old Johnny and so forth, like guys in their 60s, 70s and even 80s. And, I was kind of fortunate that I gravitated to, gentlemen that were A-grade property investors, right? Astute, A-grade property investors, shrewd old gentlemen that were really clever as property investors. And I used to love having a coffee with them. There's lots of elements to their lives that, weren't the sort of, didn't match up with other areas of my life. I was into fitness and all these other layers, but that area of property, that was gold for me. And what it did for me, I think the single greatest thing it did for me was it made me see property investing differently, because up till then I was, kind of emotional, excited about it. I'd put my thought process into what could I do with that property, and it was all emotionally driven about how beautiful it would look and how house proud I'd be, and I'd drive past and go, yeah, that's another one I own, or whatever those things were. Whereas these guys really taught me that the property is just the vehicle to create wealth, and it was all about the numbers. It was a vehicle to create wealth, and not to be emotional about it, and try to do as little as possible, really. Try to be a lazy investor. Try to make that property do the work for you. And I've taken that as far as I can take that. As you know it, now I'm very cautious about, I do very little with my whole portfolio, and I continue to build a portfolio based on being the laziest possible investor. But it is very much about that, I guess it is about that realisation. That breakthrough is when you start realising it's numbers, it's about, all those control elements that we now put in place and so forth, But let's have a look at one other thing that we talked about. I think the other element that we all probably forget, because we've all turned into, mates and have relationships with people all over the country that have, shared our passion for real estate in some form. One thing we could easily forget is the power of the team that we've each kind of put together. The fact that you can pick up the phone and talk to someone that knows more about that area of property investing than you do yourself. And, I look back 10, 15 years ago and it was almost like everyone did it on their own. She'll be right, mate. I can do it all. It was like, and you wonder why, they wonder why they didn't get that momentum, that duplication that you talk about, Trent. It really is a team sport. That's what I'm getting
Definitely,
to.
yep.
Yeah.
I think more people are realising that that's the way to go. Even starting with, not just going down to, the local bank that you deal with all the time. Brokers are, just so valuable to navigate through that, because what one bank will do, another bank won't do. What you could do here, you can't do over there, and you might go to a bank and get, you just get disappointed. Whereas if you go to a broker understands your situation, and they will guide you to the person that will give you the best possible result.
So I guess the comparison there, Gordy, would be if you're a property strategist and you're trying to match up the square peg, square hole, what's the best match for your client to help them get the best result, a broker's pretty much doing the same. They're trying to understand and go, what's the best match, when it comes to what banking products are out there. If you're buying inside a super fund as opposed to an investment property to your principal place of residence, there may be 3 different lenders involved in a person's portfolio of what they own, but that's why broker is so crucial.
So crucial.
Well, the bank's products are moving, changing, ever changing. I'm sure we'll have on this podcast some brokers to help us help explain that.
Yeah.
But at any given time, a broker has potentially needs to think about straight away. Okay, of my 12 lenders, Mr. and Mrs. Smith, this is probably the best opportunity or with this particular lender at that time, whether that be interest rates, the offset, a number of different things.
Well, we've seen that firsthand, because what we've seen banks that, overnight, have no appetite for a certain sort of lending, right? So a week earlier, they wanted to lend, to help people buy inside their super fund or whatever. A week later, no, we're turning that off, right? Yeah. Then a new person walks in and asks about that particular product, and the bank makes the person feel like it's a bad idea, when it's not necessarily a bad idea. It's just the bank is not taking any more of those loans on board. So a broker understands that, and a broker obviously understands what each lender, what their appetite is for certain things, what their, they consider the risk profile on each of those different sorts of approaches and property types and so forth. So it's a great example, Gordy. But what I'm seeing now is I'm almost seeing an evolution with people are happy to get a personal trainer, and you're the personal trainer when it comes to property investing, and people are happy to engage people, buyer's agent. I know you're not a buyer's agent, Trent. You're more of a mechanism to vet and screen and screen developers and sites and buildings and quality control and so forth. But for me, it's a vital thing for me, because there's so many layers when you put a team together, from brokers to, all those different layers, right through to independent valuers and building certifiers, all these different layers that we now think is quite normal,
Yeah, well, I guess I potentially take that for granted, but I do see it when we get clients, new clients potentially come and say, well, I've bought this property, having problems with the builder. They'll say, can I send you the contract? And I try and work through where they're up to and try and give advice. And I still think there's still builders out there, really doing the wrong things. So it's, I guess it's a relationship as well. The people we deal with, we've been in this for a long time. They're good relationships. They know they've got to do the right thing by our investors. So there's one part of foolproofing it, but the other part is obviously the legal side and making sure that the contracts are, sway for the buyer and a safety,
And I guess the other observation, what came to mind for me, is the, through that experience, you've got to be careful that it's not a team in an office together going, oh yeah, move to the next office, and it's which is not really independent specialists. It's just somebody trying to control the whole experience. And hopefully, we used to see that, probably in the 90s, that was kind of the model. The broker was an internal person, and all of these people were really under the one hat. They weren't arm's length. And of course, now investors need to make sure. I know the way that we've put together the investor-approved model is, all I'm interested in doing is, researching and using those, implementing the screening mechanisms to narrow down, what locations could be investor approved, or approved, what property type in that area could be approved, contracting Trent to come in and screen the developers to go, yep, I can approve him. I've checked his insurance, his quality of, workmanship, his systems, all of this stuff before I could approve him. Then the contracts, do they have the right safety guarantees, et cetera, all of those layers all the way through before a property can be declared investor approved, right? So in that, for me, it's all the things that we've learned over the years back to a system, and we all know that it might only be about 1 in 1,000 properties that would qualify as investor approved in a proper stamped off investor approved property. But really, that's possible because of the lessons we've learnt, the screening that we've put in place, and now this team that we've got access to. But it's also important, particularly for the viewers and the listeners, to know that they've all got to be arm's length. They can't be like, oh yeah, and I'm happy to recommend Gordy because he gives me a little, a little payment out of your, kind of earnings or whatever. There can't be any of that. This has got to be an arm's length model. I know that when it comes to brokers, we've got some great brokers, and the brokers traditionally are very happy to, pay a referral. They're really happy to go, yep, and the banks are happy to pay a referral. And because we knew that, we've said, well, let's just put 100% of that money into a charity, into Humpty Dumpty. So I think there needs to be a team, there needs to be transparency, there needs to be arm's length in nature, but you need a team. You can't do it on your own anymore. It's crazy to be thinking you could. Touch on one last thing for everybody, Gordy. Buyer ready. The whole idea, that it's one thing for me to be passionate about, how we're going to screen and qualify stock, how we're going to help investors have access and time poor investors have access to screened properties all over Australia. How are we going to give them access to that stock and guarantee that they pay the right price every time, guarantee that the vendor's got to pay, me and our services have all of that stuff covered so there's no impact to the investor. I think it's a game-changing model. But before you get to that, before you just wake up one morning and say, I'm going to go and grab an investor-approved property, of course, the first thing that we're going to ask, or Trent's going to want to know, is, well, what's the square peg, square hole scenario? It's a bespoke system, right? How do you, if Trent had to source a block of land or figure out what estate or what developer, if it was all going to be packaged up to match that person, there's a process before that. And, we've gotten to know that as being becoming buyer ready. Can you explain that for the listeners, mate?
So I think there's two possible disappointments for people who are not buyer ready. First one would be they go, I'm just going to go look for a property. Yeah, I like that property. It might meet all investor-approved criteria, but they're not buyer ready. They don't know what their affordability is. They get all excited and go and see the bank or the broker. Broker does their best job for them, but they can't afford it. Why do that? It's just not the way to do it. And the other thing that can happen is they also get excited. It gets on the same lines, and they go, yep. And at the moment, with things moving so quickly, I had it with one of my clients the other day, and they wanted to put a hold on a block of land. And in the past, you could put a little hold down, and it would give you time to go and get yourself buyer ready. But with the way it's moving, developers say, well, you can pay the deposit, but you're not getting it back if you don't go ahead. And I go, well, that's dangerous. Don't do that, So the buyer ready process is, what I do with my clients, I'll sit down and we have a look at basically three goals that they might have, and one will be a short-term goal, medium-term goal, and a longer-term goal. Understand what that is first. And then once we do know that, it's going to the broker, and then understanding what their ability actually is. Know what they can afford to buy, and we haven't even thought about location or property type yet. We just want to see where do they stand, what is their ability. Once we know their ability, then we can build a strategy around that to meet the goals that they have. And only once we've done that, then we would go and engage, and have a chat to Trent and go, well, what meets this criteria? What is that? Your example is the round peg for the round hole. So it's not a hard
square hole, mate. Square peg, square
hole.
Yeah.
Okay,
let's talk the right pegs.
As long as it's the right one for the right hole.
Yes. And look, and the point there too, mate, is that if I secure that sort of property for one of our clients. Again, coming back to those owner-occupier estates, the banks are extremely busy at the moment in finance terms, which traditionally, have been 21 days. It's hard to get a finance approval on a sale within 21 days.
Well, I was talking to a broker yesterday. ANZ Bank has told her if you put an application on our desk, it will not be looked at. They won't even read the name on that application for 45 days.
Yeah,
it's insane.
That's good.
Ridiculous.
Good example. So you then potentially enter in a contract that if it has got finance terms and it's fine to get some extensions, but you risk losing that. So if you do all your work up front, it can be seamless once you go to contract.
Yeah. Yeah, look, it's a process now, and I think one of the conversations, like I said, I was in a market on the weekend. I travelled interstate, want to check out a particular area. Sat down with a gentleman with a senior background as a senior manager with one of the banks, and he showed me the process. And he said, at the moment, this person writes the loan, this person processes the loan, this guy has to request the valuation, this guy goes to the approval level. When it gets to that approval level, he said they then go into your bank statements and this and that and whatever. And if there's a discrepancy, if you've missed out, if you've said that insurance is $700 a year and they go, no, it's $1,100 a year, whatever those little discrepancies are, back to the start, right? So he said it is just ridiculously painful at the moment, this process. And so many of the processes were in call centres and were all offshore and whatever, and a lot of those have been affected by COVID, so now they're understaffed. There's this huge upswing in demand. So there's this combination going on now. What that means is more people need to be buyer ready. They need to be finance ready. They need to know what they're looking for. They need to get that mindset and that strategy and link arms with somebody who can give them the game plan, right? And then they need to go, we've got the game plan, we know what our finance is, we know what the square peg, square hole is, and we know what we want to achieve. We want this vehicle to create wealth. We're not looking, we're not here for a haircut. We're here because we've got 15 years until we want to retire. We'd like a nice income stream. We don't want to be forced to sell the family home. We don't want to fall victim to the dirty tricks of the bloody property developers out there or those slick sales models or whatever. We want a proven strategy, and we want to, know that when we're ready to step across that line, we've got a criteria, a recipe. And then you go, all right, let's have a look at what areas we could apply that recipe. And this is the game changer, I think, that if we're going to shake the Australian, buyers in 2021, please, let's get your strategy right first, with us or without us. That's okay, but get that strategy right. I'm hoping we're going to be able to nail a lot of the common mistakes over the coming weeks. We're going to touch on the most common things, the things that repeat all the time, and the ways that we've learnt to know they're coming, and how to manage those to make sure that you don't make them yourselves. Any last comments, guys, before we close up for the day? Any thoughts at all?
Well, it's just, I guess it comes back to our open. It's all about the momentum that's building, and understanding the market is changes quickly in that little quarter. 3 months, you can really see how prices can move. No, I look forward to these podcasts, mate, and just talking about local markets, talking about construction, talking about land development, and hearing Gordy's stories about strategies and how he helps people, and even the story the other day you mentioned about trying to help some people, some clients out of a hole from a couple of bad investments. But I appreciated how you'd already had a strategy, how you could quickly do that. Well, not quickly, but work through a strategy. So it looked a lot better in 10 years' time than potentially not just sitting on your hands. So all good stories, mate.
Well, mate, I know I'll just look across the desk at either of you guys, and I know there's a gazillion podcasts just from your own perspective, because I know how many conversations we've had over the years and what your experiences are, and how many valuable lessons there are in that could be shared with other people to save them a hell of a lot of pain. None of us, we've all worked too hard to go backwards. So I think this is a very valuable format. So any thoughts from yourself, Gordy?
Only thought is, safety, and that's what I, find in the investor-approved environment. It's safety first, and that's what we want to bring to the investment world.
Yeah, good on you, mate. Good on you. Well, look, it's been great. I really appreciate you guys sharing your time with me and sharing, some of the insights, into what you've learnt and the experiences that we hope to be able to pass on and share with property investors all over Australia. It's been great having you guys here.
Great.
Good on you, Phil.
Good
Thanks,
on
mate.
you. Hey,
Thanks,
listen,
Phil.
just as a last thing first for the viewers and the listeners, I think we'll touch on a couple of key things next time. I think one of the key things we should be getting into is making sure that people know how to pay the right price every time would be a big one, because that's something that was a big lesson for me. Well, in future weeks, we'll help people understand how to pick the right property type in each of these locations we go in, what our processes are there. So many different layers that I know will be really practical bits of information for people to take away from these conversations. So I'm really excited myself, but thank you guys, and thank you listeners and viewers. This has been Street Smart Property Investing. I hope you've gotten some great value today, and thanks again guys, and we'll talk real soon.
Thank you.